We've all been told the same story since we were children. Stay in school, get a steady job, and avoid risks. In our culture, risk is treated like a four-letter word. It's something to be feared, avoided, and managed out of existence. But here is the cold, hard truth that the rich dad taught. The biggest risk you can possibly take in the 21st century is taking no risk at all. Think about it. If you rely on a single paycheck, you are one restructuring away from zero income. If you keep all your money in a savings account, inflation is slowly eating your purchasing power every single day. By trying to play it safe, you are guaranteed to lose. Welcome back to Soul vs. Cinema. Today, we're diving into Lesson 8 from Rich Dad Poor Dad *, Don't Fear Risk, Understand It. There is a massive difference between a gambler and an investor. A gambler puts money down and prays for a miracle. An investor understands the mechanics of the game, calculates the odds, and manages the downside. In this episode, we're going to move you from the sidelines to the playing field. We'll talk about how to vet an idea, how to manage the fear factor in your gut, and why your ability to handle risk is the direct ceiling on your potential wealth. If you're tired of being a spectator in the game of money, this is the episode for you. Most people avoid investing because they feel it's too risky. But usually what they actually mean is that they don't understand it. To the rich dad, risk wasn't about the investment itself, it was about the * investor. An airplane is risky to someone who doesn't know how to fly, but it's a tool for a pilot. So how do you become a financial pilot? It starts with due diligence. This is the process of researching and stress testing an idea before you put a single dollar into it. The rich dad's process for vetting an idea follows three main pillars. First, the numbers. You have to look past the hype. Whether it's a stock, a piece of real estate, or a startup, what is the cash flow? What is the debt-to-equity ratio? If you can't explain how the investment makes money on a simple piece of paper, you shouldn't be in it. Second, the exit strategy. A pro never enters a room without knowing where the exits are. Before you buy, you must know under what conditions you will sell. What is your stop loss? What is your target profit? Most amateurs lose money because they get in with a vibe and stay in because of hope. Third, the worst case scenario. You have to stress test the decision. Ask yourself, if this goes to zero tomorrow, will I be homeless? If the answer is yes, that's not a calculated risk, that's a reckless gamble. The rich only take risks where the downside is manageable, but the upside is exponential. They don't bet the farm, they bet the surplus. Let's talk about the part no one likes to discuss, the feeling in your stomach when things go wrong. Financial literacy is 20% math and 80% emotional intelligence. In the book, Robert Kiyosaki points out a fundamental difference between the rich and the poor. The poor and middle class are so afraid of losing money that they lose. They play not to lose, while the rich play to win. When a poor dad loses money on an investment, he feels crushed. He blames the market, he blames the government, and he vows never to risk his money again. He retreats. But when a rich dad loses money, he views it as a tuition fee. He asks, what did I miss in my due diligence? What did the market teach me that I didn't know before? They understand that failure is a part of the process of success. You cannot have a winner's circle without a few scars. If you want to be wealthy, you have to change your relationship with loss. You have to realize that the fear of losing money is often much greater than the actual loss itself. This fear keeps people stuck in jobs they hate for 40 years. To manage risk like a pro, you must learn to detach your emotions from your capital. Treat your investments like a chess game, staying calm, analytical, and ready for the next move, regardless of what happened in the last round. You don't start your fitness journey by trying to bench press 300 pounds. You start with the bar. Managing risk is a muscle that needs to be trained. If you've never invested before, jumping into a high-stakes crypto trade or a complex real estate syndicate is a recipe for disaster. The secret is to start with micro risks. These are small financial decisions that have a learning curve but won't break you. Maybe it's starting a systematic investment plan with a small amount of money every month. Maybe it's spending $500 to launch a very small side hustle or an online store. The goal here isn't to get rich overnight. The goal is to get used to the sensation of having your money at work. When you take these small risks, you begin to see how markets fluctuate. You learn how to read a statement. You learn how you react when the value goes down 5% one week. This confidence muscle is what allows you to eventually handle larger deals. By the time a massive opportunity comes your way, you won't be paralyzed by fear because you've already been in the arena. You've practiced. You've become a student of the game. At the end of the day, the world is divided into two types of people: spectators and players. Spectators sit in the stands, criticizing the players and talking about how lucky they got or how risky they are being. Meanwhile, the players are on the field. They're getting bruised, they're making mistakes, but they're the only ones who actually have a chance to score. Calculated courage isn't about being fearless. It's about acting in spite of fear because you've done the work. You've checked the numbers, you've managed your emotions, and you've built your skills. So here is your challenge for this week. Identify one micro risk you've been avoiding out of pure fear. Is it opening that brokerage account? Is it buying that first rental property? Is it investing in a course to learn a new skill? Whatever it is, do the due diligence and then take the leap. If this video helped you face your financial fears, please give it a like and share it with someone who needs a push. Tell us in the comments, what is one risk you're finally ready to take? Subscribe to Soul vs. Cinema for our next episode, where we talk about the ultimate goal, the path to freedom. We're going to show you exactly how to calculate your freedom number and define what financial independence actually looks like for you. Don't just watch the game, get on the field. I'll see you in the next video.